Welcome to Deep Dive with MNCL, where we don't just discuss companies, we dissect them.
Hello, this is Sahil Sanghvi, Research Analyst at Monarch Networth Capital. In the current equity market scenario, where it is very difficult to find undervalued stocks, we've managed to find a stock which is not only trading at attractive valuations, but also has a promising long-term investment thesis. The stock under discussion is Godawari Power and Ispat Limited, a leader in the pellet market of East India, which has two captive mines, Ari Dongri and Boria Tibu in Chhattisgarh, with combined reserves of more than 165 million tons and EC to mine 3 million tons per annum. It manufactures a complete basket of steel products ranging from pellets, DRI, billet, MS rounds, wire rods, ferroalloys and galvanized products. As of March 24, it had a captive power capacity of 260 megawatt, out of which 51% is generated from renewable sources. Now, in its continual quest for value addition, Godawari is expanding its pellet capacity by 2 million ton and awaiting EC expansion for mining from 3 million ton to 6 million ton. Now, this will help Godawari to more than double its pellet sales, driving very strong 14% CAGR growth in revenues and 30% CAGR growth in EBITDA and PAT over FY24 to FY27. Godawari manufactures high-grade pellets, that is 63% to 67% ferrous, that are in high demand at DRI kilns in Chhattisgarh and fetches a 1500 rupees premium versus the other producers. Availability of fully captive iron ore, which is not liable for any premium on royalty, maximizes margins for all forward integrated products. Further, the rising revenue from pellets, which will become 57% in FY27 versus 38% right now, addition of another 120 megawatt of captive solar power and backward integration for galvanized products are other factors for the margin expansion in our estimates. So now coming to the industry section, while the commodity prices have seen sharp correction in the last 1 month due to seasonally weak domestic demand and severe weakness in global steel demand, leading to dumping of low-cost Chinese steel in India, therefore we have accounted for correction in our commodity price assumptions for FY25. Now, while the global scenario will take time to improve, domestic factors like the expected rebound in prices post-monsoon and strong growth trajectory for steel production at approximately 7% CAGR for the next 3 years bodes really well for iron ore demand in India. Further, market dynamics like rising preference for captive mines, auctions happening at high premium of 100%, rising offtake of low-grade and beneficiated ore, and high operational cost of mining will all ensure a balanced market for iron ore in India and provide support for domestic prices. So now let's discuss a longer investment view on Godawari. In 3 years, Godawari will pursue capex to be an ideal steel manufacturing company with finished steel capacity of 2.5 million ton, producing wire rods, HRC and CRC, which will be fully backward integrated on iron ore and driven by green captive power. We expect this steel plant to not only double Godawari's blended EBITDA per ton, but also increase EBITDA by 2.5 to 3x. Now, all this capex will be entirely pursued using internal accruals, ensuring a net cash balance sheet, which also highlights the cash flow generating power of this business. The steel plant setup will be much more immune from commodity price volatility with higher than 20% ROE, ROCE and solid cash flow generation. Now let's discuss the valuation. So even after accounting for a correction in our commodity price estimates, we find that Godawari is attractively trading at 5x June 26 EV by EBITDA, which drives our high conviction buy rating. We value Godawari at 6x June 26 EV by EBITDA to arrive at a target price of 1,240 per share and initiated with buy. The 6x multiple is a decade average valuation showing our cautious stance to account for commodity price corrections.
If you thought this was insightful, you wouldn't want to miss our detailed report, where research is king, always.